Okay, and we're live. All right. Hello, everyone, and welcome. Hello, Dino. How are you?
Hello, can you hear me?
Yeah, we can hear you. Sounds good.
Okay, good.
Oh, yeah, sounding good. Okay, well, welcome, everyone. Today is Thursday, the 12th of August, 2021. Hope everyone is doing well. Hope everybody's staying safe. And tonight we have, once again, our very special guest, Dino from Santiment. Dino, thank you for joining us. Dino is in a different location tonight, as you can see from his, well, not his usual background. Uh, Dino gets to travel. Yay! uh, Dino's actually so you're with the team having physical meetings.
Yeah, we're part of the team. Yeah, here in Montenegro. So yeah, hopefully my Wi-Fi stays strong throughout this call. Apologies if there are some lags or some choppiness on my end. My best and also went back to my hotel room because it's quieter here. So yeah, we're part of the team, just having team meetings, talking about what we want to do next. So yeah, it's been quite nice.
Fantastic. I miss having some physical meetings, but no, that's
Yeah, I
great.
can
That's
imagine.
fantastic. So yeah, so welcome, Dino. So because Dino is at a different location, he may or may not, sort of zoom in and well, he may come in and out depending on the Wi-Fi connection. Okay, so I doing a mic test. For those of you joining us, welcome. If you can hear myself and Dino loud and clear, please give us a thumbs up. Let us know that you can hear us. Dino, do you want to say something else? Like
Yep,
mic
testing,
check.
testing. Yeah, I mean, I can also just introduce myself for people that are unfamiliar. So my name is Dino. I'm one of the content creators and market analysts at Santiment. Santiment is a essentially a all-in-one market intelligence platform. So it's a place where you can check information about a coin's on-chain activity, social activity, and social media activity, development activity, price. Information and some other sources of information that we're also currently integrating into the platform. So we currently have or provide on-chain data for over 1,200 different assets. We also are one of the only sort of companies in the space that have a very robust social data set. So providing people with information on the social activity of different coins, the social sentiment and the crowd sentiment, or sort of retail sentiment towards specific coins based on information from Twitter, Telegram, Reddit, other social channels as well. This is something that we've been developing over the last 3 years and is something that pretty much no other data aggregator really has in this space. And additionally, we also may write daily insights, and generally we have our sort of our own YouTube stream every Friday where we talk about the market based on our metrics, based on what the data, from the blockchain directly, from social media, from GitHub and other places is saying about or implying about the state of the market. So if you guys are interested in that, I strongly suggest checking out app.sentiment.net. This is our main sort of base for all metrics and features that are being produced by Sentiment. It's a platform that you get 2 weeks free once you subscribe. After that, it's just $49 a month, which is one of the most affordable sort of on-chain providers out there on the market. And yeah, strongly everything that we're going to be talking about today is going to sort of be sourced from information that we currently have on our platform that is available both directly on Sandbase, which is app.sentiment.net, or through our API. We also provide API for quantitative traders and digital asset management platforms and people that are more familiar with leveraging data on a sort of more granular level in order to build trading bots, backtest models, create their own dashboards, metrics, and so forth. So yeah, that's a little bit about Sentiment. I'll be showing a lot of different metrics today, so we can kind of get into them as we go along.
Yeah, thank you, Dino. Thanks for introducing yourself. Look, sentiment.net is definitely what a platform that I use myself on a daily basis. It's one of the best out there. if you are looking at not only the doing sentiment analysis on what's happening in the crypto world on multiple social media platforms, but also for on-chain analytics, right? So it's you can definitely deep dive, and as you'll see later when Dino goes through some of what's on the website. Okay, so again, if you're just joining us right now, welcome and thank you for joining us this evening. Don't forget to share this video if you know of someone who might be interested in this content. Don't forget to like it, and don't forget to subscribe, because when you subscribe, then every time we come on again, you're gonna get a notification on your mobile device. Okay, so if you're watching us from YouTube, click on the bell icon and choose the all, right? So that way, every time we go live, you'll get notified. If you're joining us on Facebook, follow us. If you're on Twitch, follow us. Okay, so don't forget to tag your friends if you think they might be interested in tonight's topics. Okay, so tonight we're going to be looking at a lot of on-chain data. In the last 1 week, the market's been looking, well, price action's been looking pretty good. And I'm sure Dino is going to give us a lot of insights into what's happening on-chain. And excuse me. Without further ado, I will hand it over to you, Dino.
All right, thanks, Andrew. Let me just start by sharing my screen. By the way, I can already see that my computer is relatively slow, probably because of the internet, so excuse any type of lag that I experience while opening different tabs and different metrics. So Andrew, if you can confirm that you can see my screen here on Sandbase, that would be good.
Oops, sorry, I was on mute. Yes, I can see it, and it's looking good.
Okay, great. All right, yeah. So so when I talked to Andrew about what we should cover today, I said I think Bitcoin will be the most interesting thing to cover. Obviously, for obvious reasons, Bitcoin has been on quite a rally recently. If we sort of click on the chart here and hold shift, you can see just how much the price has increased over a specific period of time. If we only sort of zoom in from August 5th to today, that's a 17% increase in price. Bitcoin has had several very impressive weeks. Over 50% since July 20th. So in general, I think as a Bitcoin goes, much of the market does as well. So I think it's very important to kind of look at the overall state of the largest coin on the market. However, I also think that there should be a little bit of a discussion here today about Ethereum, especially with the London hard fork and the Ethereum proposal 1559, which has been gaining a lot of steam, and has a lot of people bullish about the state of the Ethereum and the Ethereum network, as well as the Ethereum coin. So I'll try to sort of cram both of those things into this next maybe 30, 45 minutes. Obviously, Andrew, whenever you have any questions or want me to dive deeper into specific topics, just let me know. But yeah, so the first thing that I'm sort of going to dive into is the general state or the health of the Bitcoin network. So as you can see here, let me just, for those unfamiliar with the platform, on Sandbase here on the left, you have access to the entire metric tree of ours, where you can find over 100 different metrics from a variety of different sources of information. So this includes financial data, social data, development activity data, data on derivatives, which we have on a couple of different coins at the moment, and mostly from BitMEX, but we're planning on integrating other exchange providers as well, data directly from the blockchain, and then several indicators that we have developed in-house. So we're going to start here with on-chain data, and in particular, we're going to start with a category of on-chain data that we have sort of formalized here under network activity. So network activity covers a variety of different metrics that try to visualize the overall state of the Bitcoin network, such as the amount of addresses that are interacting with the BTC token on a daily basis, the amount of Bitcoin that is actually being transacted on the network on a daily basis, which some analysts use as a proxy for the amount of value being transferred on the Bitcoin network. So what I'm going to start by doing is looking at the general amount of unique addresses that are interacting with BTC on a daily basis. And here we're looking at the 24-hour rolling active addresses for BTC. And I'm going to zoom in here so you can see it a bit more clearly. So what we're looking at right now is the total amount of unique addresses that have either sent or received Bitcoin within a 24-hour span. Like, for example, here on August 9th, we can see that the total amount of, or the peak of Bitcoin's active addresses was at around 922,000. So almost, let's say, 1 million addresses have either sent or received Bitcoin a couple of days ago. Currently, we have seen over the last couple of days, we have seen a little bit of a decline, but I think that's mostly normal. In general, however, the trend seems to be going into a positive direction, or sort of it seems to be in an uptrend, which I think is relatively optimistic. So we harp on this metric quite a bit at Santiment, just based on our own analysis, based on our general experience with our data. It seems that sustained price rallies very often sort of necessitate a strong performance by a coin's active addresses. A lot of people use active addresses as a proxy for demand in a particular coin, right? As the amount of addresses rises, interacting with a coin rises, that implies that more entities and more users are flocking back to that coin, or are just discovering that coin for the first time. And in general, there's probably new money moving into the coin. So when you see a rise in daily active addresses, what you're essentially seeing is you're seeing increased interest and or engagement with a particular token. So it sort of follows very rationally and very sort of logically from a behavioral standpoint that a sustained rally would be sort of would do well if there's a coinciding rise in the amount of general on-chain activity. Now, throughout Bitcoin's first 5 months, and we have talked about this quite a lot, Bitcoin's daily active addresses have sort of exploded. So if I zoom out to maybe the last 2 years of data, you will see, it's probably going to take a while just because my Wi-Fi is kind of terrible, but what you will see is that throughout 2020 in particular, Bitcoin's daily active addresses were nowhere near the levels that we have seen in the first sort of first 5 months of 2021. So let me try and change it here. Let's see if this loads. Sorry, guys, give me just 1 sec.
That's all right. I think you might be that there's a lot of data on the Santiment platform. So Dino's pulling down a lot of data.
Yeah, I mean, generally, we don't really have problems with a bunch of maybe 10 or 15 metrics being loaded at the same time. It's just that the hotel Wi-Fi is kind of terrible. But anyway, what I'll show you as soon as the website loads here is the fact that over the sort of between January 1st of 2020 and January 1st of 2021, we have seen Bitcoin's daily active addresses steadily rise. And then in the first 4 or 5 months of Bitcoin's on-chain activity in the current year, it has sort of exploded to a peak of about 1.25 million daily active addresses, which is since 2017, the peak of 2017 is the highest amount of interest and engagement with the BTC token on a daily basis. And that sort of suggests that that there's sort of a healthy amount of interest and a growing amount of interest in the Bitcoin token as an asset. However, since the correction, we have seen an opposite trend. We have seen sort of 2 months almost of a decline in Bitcoin's daily active addresses, which have coincided with a general sort of, I'm gonna actually, oh, I should have stayed with it. I'm gonna load it once again. So that decline in the Bitcoin's daily active addresses that lasted for almost 2 months has coincided with Bitcoin's consolidation, suggesting that, as the market went through a correction, there has been about a 40 to 60% drop in the amount of daily addresses interacting with Bitcoin. So in one of my insights back in May, I wrote about the fact that between January 1st of 2021 and May 15th of 2021, there have only been, I believe, 5 or 6 days overall that the amount of addresses interacting with Bitcoin has fallen below 1 million. And in the first 2 weeks after Bitcoin started correcting, the amount of unique addresses interacting with Bitcoin has had 13 of the 14 days were below addresses were below 1 million. So there was a massive sort of decline in the general demand and interest and engagement with the BTC token. So what I'm gonna actually, let me try maybe signing out of my VPN. That might help, because otherwise it's just gonna.
Yes, that's right. So, pro tip, folks, for those of you who are using a public Wi-Fi, even a hotel Wi-Fi,
Over the last basically month or so. So the lowest that we've gotten in terms of Bitcoin's daily active addresses was here on June 27th, where there was only, quote unquote, 505,000 addresses interacting with the BTC. Now, if you compare this to the peak of the rally here at 1.36 million active addresses, it's obviously a massive decline, and you can kind of scroll here, and we can see that that's a 54.9% decline in the amount of addresses. So basically, the general activity on the Bitcoin blockchain has halved in about a 2-month span. Obviously, not a great sign for the overall potential for Bitcoin to rally back above 40K and eventually 50 and 60K and break new all-time highs. However, even though we're still ways away from replicating the levels of activity that we've seen back in May and April and February, March, what is hopeful is the fact that over the last several weeks, even a month, we have seen a slow but steady incline in the amount of addresses interacting with BTC. We have seen sort of the general interest in the top coin, in the benchmark coin, start to once again rally, at least a little bit. We have also seen higher lows throughout the last month. So in general, it seems that we're moving in the right direction. Now, as you can see, throughout the sort of first 6 months of throughout the first 5 months of 2021, the performance is still looking much better. But I do believe that if Bitcoin is able to maintain this rally and somehow breach the 50K mark, we are going to probably see another sort of wave of new or returning demand for BTC in terms of daily active addresses. So overall, this to me is a hopeful sign, cautiously optimistic about Bitcoin's network recovery. One other thing that we are sort of keeping an eye on is the amount of coins, unique Bitcoin, that are moving on the blockchain daily. So this is what we sort of track with the token circulation. Essentially, this metric is going to show the total number of unique BTC once it loads, the total number of unique BTC that has been moving on the blockchain on a daily basis. Now, this only accounts for unique Bitcoin that are moving on the blockchain. So, for example, if I were to send Andrew 1 Bitcoin and he sends that 1 Bitcoin back to me and I send that 1 Bitcoin back to him, if you're looking at it through a prism of this particular metric, that only counts as 1 BTC being transacted on the network. What we're trying to do here is we're trying to isolate any sort of noise, wash trading, market manipulation, and only look at the total amount of unique value that is being transferred on the blockchain, right? So similar to Bitcoin's daily active addresses, since the correction, we have seen a gradual decline in the amount of unique tokens being moved on the blockchain. Generally, like I said at the beginning, some on-chain analysts use this as a proxy for the total amount of value that is being transferred on the blockchain. However, since the bottom here on July 24th, ignore this last drop because it's the data is still being aggregated for the last 24 hours. We have seen a slow but steady incline in the amount of Bitcoin being circulated on the network. We have also seen some very strong upticks here as BTC started breaking 40K for the first time, right before the short-term correction. So in general, there are some relatively cautiously optimistic signs about Bitcoin's sort of short-term performance. From a generic sort of general, a state of Bitcoin's network. So, obviously there are a lot of different metrics here that we could take a look into and dive into. However, given that we're sort of fairly limited on time, I like to usually tell people to keep an eye on active addresses in particular. And the reason why, or sort of one other way to demonstrate why I'm a little bit more bullish currently on Bitcoin in terms of its on-chain activity compared to Ethereum is that when we look at Ethereum's daily active addresses and we look at its sort of dynamic with Ethereum's price or the relationship with Ethereum's price, we can see a relatively different trend. So even though Ethereum, the price of Ethereum has grown steadily, fairly significantly. So if we take this period here, we can see that there's been a 76% increase in Ethereum's price. So within the sort of time frame that I've selected here. However, in this period alone, while there's been a 33% increase in price, there's been a 23% decrease in the amount of addresses interacting with Ethereum, and we're still at about we're still less than 500,000 addresses on average, which is obviously ways away from 600, almost 800,000 that we have seen throughout the first 5 months of the of Ethereum's price action this year. And in general, we have seen, similar to Bitcoin, this slow but steady increase in the amount of addresses interacting with Ethereum throughout the rally, which was sort of a fundamental support, which gave fundamental support, or it was a fundamental justification for the rally, because it suggested that as the Ethereum's price was rising, there also was a rising demand for the coin, new money flowing into the market, and in general, there was some type of network level justification for its price action. Currently, there's a little bit of a divergence here, potentially a bearish divergence. I wrote about this. If you guys want more information about where Ethereum is at the moment, I wrote a weekly report. You can find it here on Insights, where I surveyed Ethereum after the London hard fork. And I do mention that even though Ethereum is continuing to to rally and break new resistance marks, one concerning indicator remains this sort of divergence between the coin's price, which continues to rise, and the amount of addresses interacting with Ethereum, which is, as of yet, in a downtrend. So this is something that we would suggest keeping an eye on for the time being, right? Now, I'll go back to Bitcoin. And before diving deeper into other on-chain metrics, I also want to spend a little bit of time talking about Bitcoin's social metrics. So like I mentioned at the beginning, here at Santiment, we are one of the sort of only providers on the market of a very comprehensive social data or general information, social information about any coin on the market. So currently our database includes over 2,000 different cryptocurrencies. And for each of those cryptocurrencies, we track the amount of mentions that those cryptocurrencies receive on over 1,500 different crypto-related channels. This includes Telegram groups, crypto subreddits, Twitter accounts, professional trader chats, and other sources of information. And we continue to grow this list of sources that we scrape this information from. And then we also track the average mood or the average emotions of the crowd in those messages. So what is the sort of average sentiment towards Bitcoin on a daily basis? What is the average sentiment of Ethereum among the retail crowd on a daily basis? Is the crowd becoming more bullish or the crowd becoming more bearish, and so forth? And so let me show you here. This is what we're seeing in terms of Bitcoin social volumes. So Bitcoin social volume has, as its price started to rise, we have seen a slow but steady increase in the amount of mentions of Bitcoin on crypto social media throughout the last 2 weeks. This is obviously to be expected. It's still ways away from this massive uptick in Bitcoin-related mentions, which is obviously sort of as Bitcoin started to correct, there were many concerning voices and they made themselves heard on social media. So this was obviously sort of one of the biggest sort of capitulation events in Bitcoin's history from an on-chain data perspective, and it has clearly left an imprint on Bitcoin social data as well. So over the last 2 weeks, we have seen a continuous uptick similar to its daily active addresses. We have seen a slow but steady uptick in the amount of mentions, daily mentions of Bitcoin on crypto social media. And if we look at the average mood of these mentions, you can find it here on Bitcoin's weighted social sentiment. So this is a metric that essentially takes all of these mentions of Bitcoin that we have collected from crypto social media, and we pass it through a machine. We've developed a machine learning algorithm. So we parse all of these messages that we collect as either positive, negative or ambivalent towards a particular coin. And the end result is this metric, which essentially tracks the average mood towards a coin on crypto social media. And as you can see, I'm going to zoom in a little bit. As you can see, Bitcoin-related sentiment, I'm looking here at the 12-hour interval. I can also look at the daily. In general, Bitcoin-related sentiment has moved away from a predominantly bearish. So basically, these show the standard deviations from the mean. So the higher the orange bar is, the more positive sentiment on average is towards a particular coin. The lower the bar is, the more negative or bearish sentiment it is. So throughout the correction, we have seen a predominantly bearish sentiment towards the top coin. Makes perfect sense, right? As Bitcoin fell all the way below 30K at one point, there were many expecting, at least on my timeline, expecting 25K, expecting 20K to arrive within a couple of weeks. However, since Bitcoin started, and actually even before Bitcoin really started to recover, we have seen a general shift in the overall mood of Bitcoin-related messages on a daily basis. So this first spike in Bitcoin-related sentiment actually came, like I said, even before BTC really started to break out. And there's a reason for this. This was the moment at which, or the time at which the B-Word conference was taking place. So for those unfamiliar, B-Word conference was sort of it was a gathering of great minds that were or sort of large influencers that were talking about the future of Bitcoin and the current state of Bitcoin. It featured Elon Musk, it featured Jack Dorsey from Twitter, Cathie Wood, a couple of different very influential people in this space. And in general, a lot of people considered this to be a fairly bullish event for BTC, particularly because Elon Musk at that conference suggested that Tesla might return an option to purchase their cars via Bitcoin once there's a sort of there's a clear way for Bitcoin to be more environmental or eco-friendly. And he's been talking about how he's been discussing this with American Bitcoin miners, and they seem to be close to reaching some type of a consensus. So obviously that was very widely received within the crypto community as positive news, and this is the first time that we saw Bitcoin-related sentiment really move back into positive after a long time. And if you look at the daily interval, you will see there you go. So once again, don't ignore this last drop because it's the data is still not being calculated. So here we can generally see that we've gone very, very bearish on a sort of when the data is aggregated on a daily level. We've almost at the start of July, we have been at our most bearish since the April 3rd here, local top. And then since then, we have moved back into a more and more positive territory. Now, whether this is good for Bitcoin or not is sort of an open question. So in general, previously, based on our data and based on several backtests of our data, what we have found is that increasing social volumes, so mentions of a coin, as well as increasing sentiment or extremely bullish sentiment towards a coin is actually rarely a friend to cryptocurrencies. So for instance, you can see several spikes in Bitcoin-related sentiment, first of all here, very briefly before its crash and sort of coinciding with its all-time high. We have also seen a massive spike in bullish sentiment here as Bitcoin started to correct, because a lot of people were screaming or shouting by the dip. They thought because this first sort of leg of the correction was prompted by Elon Musk's bearish tweets, they thought that, it's just a short blip in the market. We are going to very quickly and easily recover back from these levels. It's a great opportunity to buy Bitcoin at a discount. So in general, the crowd was very bullish about Bitcoin's ability to recover. Obviously, the exact opposite happened. So, and we have seen this time and time again. Even if we look back in 2019, we can see similar patterns. So overall, previously or historically speaking, not just for Bitcoin, but based on a backtest of ours on over 2,000 different metrics, high social volume in elevated sentiment, positive sentiment, is rarely a conduit to a sustainable price rally. And this also makes sense from a behavioral standpoint, right? Because as more people talk about the coin, more people are becoming increasingly confident and overtly greedy. And they believe that the market is going to make them rich without them having to do much work. And most of these increased mentions of a particular coin, usually they are rocket emojis, fire emojis, moon emojis. Let me just plug in my laptop here. So these mentions are inherently bullish in nature, and that's why, in general, looking at the increased activity of the crowd in terms of Bitcoin's social sentiment and social volume, it's a slight cause for concern. So nothing that I would say is still sort of Bitcoin sentiment is not near its all-time high or anything, and its social volume is still sort of relatively low. It's something that I would definitely pay attention to as we move forward, right? So I can also show you what Ethereum social volume looks like, and it's a little bit more, even more concerning. So if I look at Ethereum, give me one second. All right. By the way, can you still see me, Andrew?
Yeah, I can see you and we can hear you.
Okay, great. So this is what Ethereum's social volume looks like. So within the past week or week and a half, let me actually change the interval to 1 day so you can see it a bit more clearly. Yeah, so this is when the London hard fork actually happened. Sure, this is a slight outlier, but in general, the amount of mentions of Ethereum has been on an uptrend. We can see the last time this has happened, how the market reacted. So in general, this is what I mean by saying elevated mentions of a particular coin. Like if I look at Matic, I think it's a good idea or a good example of how this sometimes works in our experience. So let me zoom in here. Yeah, so this is what we've seen for example, for Matic. Maybe 8 hours is a bit clearer. For Matic in the past, so several of Matic's local tops have previously coincided with large upticks in mentions of Matic on crypto social media, and we're actually seeing another sort of strong rise in the mentions of this particular coin on crypto social media within the last 24 hours as its price starts to rally again, suggesting that there's maybe an increased risk of a short-term correction. So this is what I mean by saying ideally you would actually want the coin to have low social volume and relatively bearish sentiment, because it suggests that the crowd is still sort of skeptical, it's not overly greedy, and in general the amount of confidence in the coin's future performance isn't overblown, meaning the coin is less likely to be overvalued. So yes, Bitcoin social volume has been rising slightly over the last 2 weeks. Its social sentiment has also pretty clearly flipped from predominantly bearish to predominantly bullish over the last 2 weeks or so. However, I think we're still sort of ways away from approaching sort of dangerously high levels of both social sentiment and social volume. But if Bitcoin continues to rally, especially if it somehow manages to sort of get to 50K, maybe even breach 50K, I would not be surprised if we saw massive spikes in both social volume and social sentiment. And as a result, that to me at least would signal an increased risk of a short-term correction in order for these metrics to normalize, in order for the market to kind of get the better of a lot of traders before we can move back into day-to-day operations. So this is as far as social metrics are concerned on our platform. So I can move back into on-chain data, Andrew, unless you have anything to add or anything to ask at this point in time.
No, but for those of you who aren't too familiar, Dino's on every second Thursday of the month, so we're very lucky to have Dino come on and talk to us about on-chain data. And I think so Dino's talked about a few metrics tonight. So one of them is actually the daily active addresses. So daily active addresses, I'll just reiterate what Dino said. It's basically the amount of, or the number of addresses, or transactions, or wallets that have actually made transactions on the blockchain. So the higher the number, means the more people are interacting with the blockchain, and the more utility, or the more people who interact with the blockchain, there's usually a correlation of that to price, to price movement. And the other one of the other metrics that Dino shared is social sentiment, right? So basically, sentiment consists of a bunch of very intelligent and crazy data scientists who crunch a huge number of a lot of data points, right? And so they summarize it in such a simple and easy way for us commoners to gain insights into what's happening. So what they do is they basically sweep all crypto social media, whether it's Telegram or Twitter, whatever the social media platform, they sweep it. They collect all that data and they go through it, right? Is this one positive? Is that one negative? Is this one positive? And so they summarize that, which gives us that chart that shows us whether it's a positive sentiment or negative sentiment. And so that helps us gauge. And again, that has there's a correlation to price, based on that metric. Okay, so Dino, back to you.
Sure. Okay. So I wanted to cover at least one more sort of category of metrics, and this would be the MVRV. And then, if we have time, I would also like to talk a little bit about the exchange data for Bitcoin, because I know a lot of people are interested in sort of the movement of or the flow of Bitcoin tokens to and from exchange wallets. So we can sort of talk about that briefly as well. But primarily, I also wanted to touch upon Bitcoin and Ethereum's MVRV ratio. So for those that are unfamiliar with this metric, essentially what MVRV ratio is, it is a fairly popular on-chain metric that tries to calculate the average profit or the average loss of all addresses that have acquired, in this case, Bitcoin, in a particular time frame. So currently we're looking at the 30-day MVRV ratio, and we can see that at the moment, Bitcoin's 30-day MVRV ratio is 14.3%. All that means is that according to this metric, which does make some assumptions, on average, the profit of all addresses that have acquired Bitcoin in the previous 30 days is plus 14.3%, right? So the higher this metric is, the more sort of unclaimed profits there are, and the lower that this metric is, the more that the holders of a particular coin are underwater. And so, in general, as a rule of thumb, the way that people use this metric, the way that on-chain analysts use this metric, is that the higher the MVRV, like I said, the more unclaimed profits there are, and the increased likelihood that people or holders are going to start claiming these profits, and as a result, offloading parts of their bags, and in general applying a negative pressure to the market, or sell side pressure, right? So the higher the MVRV ratio, the more dangerous it might be to enter into a coin, because it suggests that there might be a risk of normalization, or a short-term correction. And then the lower the MVRV ratio gets, the more undervalued a coin is according to this metric. So it might be an opportune time to accumulate. This is at least the way that some people use this metric in a vacuum. So with that being said, or sort of with those caveats being said, I wanted to show what Bitcoin's both 30-day and 365-day MVRV ratio looks like at the moment, and then compare that to Ethereum's as well. So like I mentioned, the Bitcoin's current 30-day MVRV ratio is about 14%, 14.05 here on a sort of 3-year scale, which, if we look at previous 3 years of Bitcoin's data, is relatively high, right? So it would appear that, based on the last 3 years of Bitcoin's data, so let me actually draw a line here so you can see. This is where we are right now. And this is where this is the amount of time that Bitcoin's 30-day MVRV has, remained above these levels in the past 3 years. So it's not a long time. In general, I think values of about plus 15% and more, historically speaking, seem to be an established danger zone for Bitcoin's 30-day MVRV ratio. That seems to be sort of a point in time at which short-term holders or swing traders start to claim their profits, or have claimed their profits in the past. They start applying sell-side pressure, and as a result, the price takes a little bit of a downfall before, hopefully making another leg up. So even though Bitcoin's 30-day ratio has at points in time moved all the way up to, I think here it was like 40%. If I zoom in, I would see exactly how much it is. Yeah, 40.9%. There we go. This is this only lasts for maybe 24 hours or 36 hours. These levels, sure, they can happen, but they're usually an anomaly that doesn't last, or isn't necessarily sustainable. It doesn't last for a long time. So yes, sure, we can see another sort of move above 50K from this point on. However, this would, in general, at least based on historical data, suggest that we are a little bit overheated, and the MVRV ratio as a metric needs to stabilize. Some profit taking needs to occur in order for the market to move back into an equilibrium. Right. So this is what Bitcoin's 30-day MVRV ratio is telling us, is that the short-term traders might be at a point where historically they have liked taking some parts of their profits. If we look at Bitcoin's 365-day MVRV ratio, however, we will see a slightly different picture. So this is obviously a longer-term indicator. So I can look at maybe last, say, from 2016 onwards. There we go. And I'm going to change it to a 1-day interval. Okay, so this is where we are in terms of Bitcoin's long-term MVRV ratio. So this is the average profit. This metric shows the average profit of all addresses that have acquired Bitcoin in the previous 365 days. Currently, it's also at around plus 15%, right? As you can see previously, during the sort of heydays of previous rallies, Bitcoin's MVRV ratio it's gone as high as what is this, like 100, I think 120%, or actually almost 200%. But in general, like I said, this only lasts for like a very short amount of time. Generally speaking, anything above 100% to 120% seems to be a period of time at which Bitcoin's 365-day MVRV ratio seems to be very, very overblown, and makes way to at least a short-term correction, right? So we are still ways away from in a long-term perspective, in terms of long-term holders. We are still ways away from points in time or profit margins at which long-term holders have previously started claiming their profits. 15% for people that have been hodling Bitcoin for a year or more isn't necessarily what they're after. They seem to be, at least based on this metric, they seem to be looking for a larger part of the cake before they start claiming those profits and actually applying sell-side pressure. However, that being said, we are in a positive territory, right? There are actually some amounts of profits that can be claimed even by this group of holders. So if the market all of a sudden starts to become a little bit volatile, we have seen these levels also be relatively dangerous for Bitcoin's short-term price action in the past. And obviously, like I said, when you look at Bitcoin's when you look at these lower levels, especially when we look at the 30-day MVRV ratio, when you look at these lower levels, they are fairly consistent as far as potential support zones for Bitcoin's price action. So let me zoom back to a 1-day interval. So the one support zone is at around minus 30%, and another sort of established support zone was here around minus 25%, both here at the bottom of May 25th and here at the bottom of the 2018 correction. We have sort of bottomed out at around minus 25, minus 26% before starting to recover, at least in the short term. So this metric does seem to sort of have some merit in both directions. At the moment, however, both of these metrics have inflated in numerical value because of Bitcoin's price action, and as a result, there's a little bit more of a risk of a short-term price normalization, especially when you look at Bitcoin's 30-day MVRV ratio. So if you look at Ethereum's MVRV, let's do that real quick. You will see fairly similar stories. So here we were at as high as plus 32%. So if I draw a line here, very sort of consistent level of Bitcoin, Ethereum's 30-day MVRV ratio over the last 3 years or so. Yes, this is during the May rally, as well as, however, usually specifically for coins that are that don't have too much. So specifically for coins that have, let's say, 5 years or 4 years of data, the first year of MVRV data is relatively volatile. So that's why, for example, in 2017, you'll see a higher volatility for Ethereum, whereas for Bitcoin, it has been relatively stable. But anyway, in the last 3 years or so, you can kind of see it come to an equilibrium. About 25, 30% is where it is at the low or highest level, and about minus 30% is where it tends to drop at its lowest level. This obviously was a coronavirus crash, so we've gone to as low as minus 46%, but clearly a black swan event, and we've almost immediately started moving back up. So this is as far as Ethereum's 30-day MVRV ratio is concerned, and then as far as its longer-term ratio is concerned, we are, actually, let me move to a one-day interval. So we're at about plus 59 or 60%. So the average profit of Ethereum holders that have acquired this coin in the previous 365 days is around plus 60%. So similar to Bitcoin's, the highest level of MVRV ratio, even during this this current rally, we're still ways from it, plus 150% in particular. However, we're already sort of less healthy than we were here, for example, right? So this sort of first venture into Ethereum's negative MVRV ratio since the coronavirus crash was a more opportune time to accumulate, at least according to this metric, compared to here, where we're already starting to heat up a little bit and we're moving slightly into an overvalued territory. Now, obviously, MVRV ratio isn't a silver bullet, and sometimes this metric tends to lag before we really see a correction. So take this with a grain of salt. However, it's at least important to see where we stand in terms of both the potential sentiment of short-term and long-term holders. Both categories seem to be now moving into a level of profit where especially short-term holders have shown a tendency to take some profits and put some money off the table in the past 3 years, which might be slightly problematic for the top 2 coins, right? All right, so one last thing that I wanted to show, which is in relation to what I've just been talking about, is Bitcoin and Ethereum's exchange-related data. Let me change the interval to maybe 4 hours. There we go. Actually, let's take the last year of data. There we go. All right. So one or several additional metrics that can help us understand whether there really is an increase in sell-side pressure, at least on a network level, is by looking at the behavior or the flow of Bitcoin to and from known exchange wallets. And you can do that on Sandbase with several different metrics. So you would navigate here to on-chain, exchanges, and under exchanges, there's a number of different metrics. There are even more metrics for exchanges for Ethereum-based coins, because Ethereum-based coins also use deposit and withdrawal addresses, and we track those as well. For Bitcoin, the sort of general heuristics are, and the way that the network works are a little bit different. In general, the main metrics that I wanted to show here are Bitcoin's exchange inflow and exchange outflow, showing the moves in and out of the exchanges for BTC. So let me actually zoom in so you can see it a bit more clearly. Last 3 months, exchange inflow. So the idea here is that the higher the exchange inflow gets, the more BTC is being moved to known exchange wallets on a daily basis. So exchange inflow essentially is a metric that tracks the total amount of BTC that is moving away from individual addresses, private wallets owned by you, me, anyone, to known exchange wallets or addresses that we have labeled as belonging to exchanges. And obviously, this is a fluid metric. We keep finding new addresses that belong to exchanges. Addresses continue to add new addresses that belong to them, and this is sort of a game of cat and mouse. And labeling here is very important, and we have very sort of complex heuristics to understand which addresses may belong to exchanges. So there is sort of a margin for error here, or an opportunity for error. However, we're expanding our labeling efforts on a monthly basis. So we're, this is the current state of our exchange inflow metrics, which essentially tracks the amount of BTC moving to known exchange wallet. So what we can see here at the end of May and the beginning of June was a massive offloading event for Bitcoin holders. And I'll show you the scale of that event, maybe if I zoom out to the last year of data, just so you can see exactly how big it was. This sort of massive inflow of funds from private addresses or individual addresses to known exchange wallets, suggesting that at this point in time, a lot of people were capitulating. A lot of weak hands were selling because they were expecting further corrections, and they were selling quite rapidly at a loss even before, because they were afraid of future losses. So at the moment, we have seen a slight uptick in Bitcoin's exchange inflow here before this first sort of first crash. However, since then, over the last, basically since the start of August, the amount of Bitcoin moving to exchanges has actually declined on a daily basis. And so I do also want to compare this to the amount of Bitcoin moving out of exchanges, right? And you can do this by clicking here on exchange inflow. And what this will show you is the both of these metrics combined, so exchange inflow versus exchange outflow. Or you can just click here on the exchange flow balance, which basically calculates the difference between these two metrics. And that's what I'm going to do now. And what you'll see over the last 2 weeks are actually quite a few drops in Bitcoin's exchange flow balance. So here, during the May correction, we have seen a cluster of large spikes in the net flow, or the total amount of Bitcoins in versus Bitcoins out of exchanges were in the favor of Bitcoins into exchanges. However, even though the price of BTC has continued to rise, we have seen a relatively sort of the exchange flow balance has mostly been in favor of Bitcoins out of exchanges. And one more way that we can confirm this is by looking at the supply of Bitcoin on exchanges. There you go. Maybe as the percentage of total supply is better. And what you see is here, number one, massive amount of massive rise in the supply of Bitcoin on exchanges throughout the correction, suggesting once again very sort of network-wide, a strong network-wide reaction and a network-wide move to offload funds and short-term capitulation. However, in the past two weeks or so, so this is a particularly strong drop that I still haven't found a particular or specific cause for. This is due to one or two big transactions. So even with that being sort of ignored, on a two-week scale, we can see a definite decline in the amount of BTC moving to exchanges, even as its price starts to rise. So to me, even though Bitcoin's MVRV ratio suggests that yes, both short-term and long-term holders now have some profits that they can claim, and as a result, there might be a challenge for Bitcoin bulls to absorb all of this rising sell pressure, at least on an on-chain level, we are still yet to see that rise in sell side pressure. Once that arrives, it might be difficult for BTC to maintain a strong uptrend, but for now, at least, the amount of BTC on exchanges continues to drop. So we can also compare this to Ethereum. So as you can see here, like I mentioned, for Ethereum-based coins, there are a few other metrics that we also track. One of the metrics that we track is the amount of active deposits. So deposits are addresses that are used on the Ethereum network to move Ethereum to known exchange wallets. So for example, when you move coins to, I don't know, Binance, they don't directly go to a Binance cold wallet or hot wallet. They first pass through a deposit address, what's known as a deposit address, and these addresses are owned by exchanges. So what you can do is you can track the amount of active deposit addresses on a daily basis. And the premise is if the amount of active deposit addresses rises, there's more people utilizing these addresses to funnel money or funnel coins to exchanges. And there's, as a result, a rise in sell side pressure, right? We have seen this massive rise in the amount of active deposits for Ethereum in the early May, coinciding with the correction. We have also seen quite a big spike in active deposits here around local bottoms, suggesting network-wide capitulation. However, in the last 2 weeks, essentially since the start of August, the amount of deposit addresses has actually declined. So we see a clear sort of divergence between the price of Ethereum and the number of addresses that are actually being used to funnel Ethereum to centralized exchanges. Now, obviously, keep in mind that this is particularly pertaining to centralized exchanges in particular. However, when you look at Ethereum's exchange inflow, here we track the flow of funds both to centralized and decentralized exchanges, and you can also actually select specific exchange that you want to, account for. But currently, let's look at it from a sort of from a bird's eye perspective. So, looking at the total amount of Ethereum being moved to known exchange wallets, there hasn't really been a massive inflow. There have been several sort of notable spikes in Ethereum's exchange inflow over the last week or so, but nothing like compared to what we've seen during the correction here, what we've seen during the local top here on February, and during several bottoms suggesting capitulation, right? And also, if you look at the supply of Ethereum on exchanges, you'll see a general decline or a plateau. Overall, definitely not an uptick like we've seen during the correction here, right? Or during both of these local bottoms. So, from a bird's eye view, both in terms of what we're seeing on the on-chain data for both Bitcoin and Ethereum, the sentiment of holders still seems to be hodling favored, or the general mentality seems to be hodled for the time being. We're not seeing a large network-wide effort to offload coins yet, but if I were to look for those signs, these are the metrics that I would be using. So I would look at active deposits, exchange inflow, exchange flow balance, and supply on exchanges. All of these you can find on Sandbase among 100 different metrics. So these would be, for me, if I were to see these large spikes in exchange inflow and active deposits in the next couple of days, I would be a little bit more concerned, because that would suggest to me that, okay, the holders are starting to take profits, and we might be seeing a rising sell wall, right? I think another good example, once again, it would be Matic, if I'm not mistaken here. So if we look at Matic's deposits, all right, one sec, there we go. Yeah, so if we look at Matic's deposits, quite often we have seen, spikes in deposit activity around local tops, suggesting, look, people are starting to move their Matic coins to exchanges. We have also seen it around local bottoms, similar to Bitcoin and Ethereum as well. So these metrics can both mark bottoms and tops. So during tops, essentially what it points to is massive profit taking events. During bottoms, what it points to is holder capitulation. Generally, people being very, very fearful, and sometimes that can be an opportune time to accumulate, buy the dip, take away from weak hands and into stronger hands. And once again, we are seeing currently an uptick in Matic's active deposits as its price starts to rally. So it might be a little bit of a concerning signal that you might want to be paying attention to in days to come. So this is what we're seeing for Bitcoin and Ethereum at the moment, exchange-wise, both in terms of centralized exchanges and on Ethereum decentralized exchanges as well. in terms of on-chain data, we're not seeing massive sort of network-wide moves to sell. For the time being, probably a positive sign, but I would keep a very close eye on these metrics moving forward. So yeah, that's sort of a general, Andrew, a general overview that I wanted to provide here today. I know we've talked about maybe 5 different metrics, but I know if we dive into 10 different metrics, we're gonna maybe spend 5 minutes on each one of them, and we can't really do them justice. So that's why I wanted to this time around just focus on 4 or 5 metrics, but really dive deeper into them and show you how we use them at Santiment to generally analyze the current state of the market. So if you have any other questions, like I said, every Friday, so tomorrow at 4 p.m. Central Eastern Time. I'm not sure what that is, like UTC or Malaysia time. So it would be basically an hour from now. Tomorrow, we are going to have a weekly stream on our YouTube channel. So just search for Santiment on YouTube, and you will be able to, we're going to do it live, look at the current state of Bitcoin, Ethereum, and we also take questions from the audience about coins that they would like us to analyze. So yeah, if that's your kind of thing, feel free to join us for our stream tomorrow as well. So yeah, Andrew, I think that's going to be enough for me for now, unless obviously you or somebody from the audience has any questions that they would like us to go over.
Now, thank you so much, Dino. Thank you for doing the download. And as Dino said, look, there's hundreds of metrics on the platform, right? And so Dino focused on a few of them, and he wanted to give more focus on them so that for people who aren't used to the types of metrics that are used to measure crypto. We sort of deep dived a little bit more today. So hopefully, you guys who are watching this, you found that pretty useful. We do have some comments and some questions from the audience. I might just flash them. Some you've already answered. So Joe said, "What are the prospects of Ethereum?" I guess you've kind of covered that, right? He would like to know also for XRP. So we didn't cover XRP today. We may have run out of time, guys, but I'll just go through some of the some of the questions. So this one's from Ben on YouTube. He says, "Just realized that Sentiment has its own coin. What use case does it have?" Well, look, first of all, actually, we should have said this right in the beginning. Whatever we say tonight is not financial advice, right? So don't take this as financial advice. This is just us talking about on-chain metrics and also sentiment analysis. So don't take this as financial advice. If you need financial advice, go to your licensed financial advisor. But did you want to answer about the sentiment?
Sure.
Token?
Of course. So the Sent token has various different use cases at the moment. At the start of its life cycle, it was similar to BNB in that it was a discount token where you can, stake SAN for access to different parts of the platform. You can still do that. You can burn SAN, or you can provide liquidity to the SAN ETH Uniswap pool. And as such, it people that provide liquidity to that pool get access to the platform. So if you believe in the coin, if you believe in what we're doing, this is an alternative way instead of paying. You can also provide liquidity to our SAN ETH Uniswap pool and get access to the platform. In addition to this, we have been hard at work at providing or building decentralized ways to sort of collect market intelligence and to produce market intelligence. And you will find some of these, so I don't want to dive too deep into them because I know that we don't have time. But here, these are the main sort of centralized parts of our platform. Sanebase, the platform that I've been using for the past hour, is showing you a bunch of metrics. A Google Spreadsheets plugin that allows you to import all of this data directly into Google Spreadsheets for people that are used to functions and Excel for doing their backtesting and creating dashboards, using our API directly, so you can take this data in a raw format to create your own models, bots, and so forth. So these are all centralized parts of the Sentiment as a business. However, like I said, we have been, especially in the last 6 months or so, we have really looked into expanding both the utility of sand token and in general trying to decentralize market intelligence. So one big sort of project that we have been working on is what we call SANR, which is sort of a uh, it sounds like sonar, right? And this is the reason why we've named it as such. It's a decentralized marketplace for price prediction signals. Essentially, what it means, and let me just change my Windows theme here because it's gray at the moment, and the site looks a bit wonky as a result. Essentially, what SANR is, it's a decentralized marketplace for, like I said, for price prediction signals. So the premise is very simple. Once you have an idea of where you think the market might be headed, whether that's based on our metrics or based on your own intuition, you can create predictions. So let's say I think Bitcoin is going to continue to rise from this point on. You can set up a target price, a stop loss, and then you can also stake sand tokens to enter your forecast in our reward program. And there's a bunch of participants, leaderboards as well, that sort of you enter into a competition to show your market acumen and market intelligence. So that's sort of the gamified version of the or portion of the platform. What we really think is cool about CNR is that each prediction that you make, a stake prediction that you make, gets recorded on the blockchain as an NFT, and it becomes an immutable proof of your market intelligence, right? So any sort of prediction about Bitcoin, Ethereum, any other coins on CNR, which we're continuously expanding, that you make, and you need to make it, you need to connect to MetaMask and create a staked prediction. Any prediction that you make gets recorded on the blockchain as an NFT on the Ethereum blockchain and becomes a transparent public sort of a ledger of your market intelligence and market reputation. So this allows you to have a very clear, open view into your previous market acumen and the market predictions. And once you have sort of created a relatively strong reputation, like for example, let's look at this current user, Panama. He currently has about 12 close predictions, and his performance in those 12 predictions is plus 26%. So let's say that I, as a person that I'm not sure where the market is going to be headed next, I might want to subscribe to his signals because one, I know that these signals are completely immutable and they're each of them is recorded on the blockchain, so I can go back and check to make sure that there's been no tampering or editing of his signals in sort of sense of the market. In the very near future, Panama here is going to be able to mint subscription NFTs for his future signals, where he will be able to say, look, if here's my performance so far. This is why I think I've sort of proven that I know where the market is going to be headed next, and I can look into each of these signals. For example, if I look at his Badger signal, this is where he created a rise signal, and this is where he closed it. Pretty good. 65% increase just in the performance of this one signal. So in the very near future, every user on the platform will be able to issue subscription NFTs that you or I can buy in order to subscribe to his signals and get notified when new signals are created, so I can copy trade him if I want. So and the entire sort of ecosystem is built around or built on top of Sand token as the cornerstone of the platform. So this is another way that we're looking into. First of all, just in general, decentralizing market intelligence, because we're all about providing context to the markets and adding new ways to interpret data, but also to add utility to our native token. So yeah, I strongly suggest checking out CNR for people that are interested into gamified market intelligence and creating or sort of polishing your own market reputation and even monetizing your knowledge about the market in the very near future. So that's one of the projects that we've been working on as far as how you can utilize Sand token in a new way.
That's really cool. And for those of you who have just heard what Dino just shared with us on how how sentiment is decentralizing and gamifying um the prediction or market intelligence. You've just had a glimpse into the future of a lot of how web apps are going to be built, right? This like you've heard of the term web 3.0. You and NFTs aren't just for art, right? Like NFTs have real utility. It has real utility. So you've just had a glimpse into the future here on Future Proof. So remember that.
Right. I
Okay.
think more and more people will be using NFTs for not just art, music, these sort of incumbent use cases. I think this is something that is sort of new in terms of actually trying to connect, the still think the principal use case of crypto market, which is speculation, and connect it with NFT in a more seamless way. So this is what we're very excited about.
Yeah, it's really cool. I mean, you just mentioned you use an NFT for a subscription service. That becomes your token to verify you are who you say you are and that you've paid for your subscription. So
Right.
there you go, right? Utility for NFTs. Look,
And you
guys,
can
it's
you can
10.
use it on a
Yeah.
secondary market. Then you can sell. If I buy an NFT subscription for Andrew's signals, I can then resell it on a secondary market. And other people can access these signals instead of me for a specific price. If Andrew signals all of a sudden become very popular, the value of my NFT also rises as an underlying collateral, so to speak. So yeah, very cool. A bunch of very interesting potential use cases for the platform that we're excited about.
Yeah, it's really cool. And guys, there's so much there's so many new things and innovations that's happening in this industry and in this space. In America, I think it was July or August, right? They in the state of Wyoming, they have just now legalized the registration of DAOs. For those of you who don't know what DAOs are, they're decentralized autonomous organizations. So effectively, it's like registering a company like an LLC, but it is a decentralized autonomous organization, right? So you could issue NFTs or you could issue tokens, and the token holders would effectively make decisions on behalf of this organization. So, um, Dino, thank you so much for coming on. You look a little bit frozen. Maybe your Wi-Fi has. Wow. Well, good thing it's only gone now. Um, okay, okay. All right, I think Dino's gone. All right, guys. Well, thank you so much to Dino, right, from Santiment. If you enjoyed the content, please come back. Oh, I think I might see Dino back on.
I'm back.
Dino's back. All right, you're back. So I was just saying, Dino, thank you so much for coming on. Right, we appreciate you coming on, and everyone who tuned in. Thank you for watching. Come back again every second Tuesday of the month, and we have Dino on. Take care, stay safe, and we'll see you soon. Thank you, guys.
Thanks, everyone.